Let's start with definitions of the key concepts needed to understand the abatement process. The first concept is commitment. The commitment is the means by which you create a legal duty for property owners to pay taxes for a fiscal year. The annual commitment requires that you prepare a tax list of all real and personal property owners that are subject to tax for the fiscal year and the amount they owe. You give or commit the list with a warrant to the collector. The warrant authorizes the collector to collect the taxes owed by each taxpayer in the list. The commitment fixes the liability or legal duty of the taxpayers to pay the tax owed. The second concept is assessment, which results from a commitment. When you commit the tax list, you assess the tax on each property owner listed. You determine the tax assessment by multiplying the fair cash value of the property by the tax rate applicable to the property class. The collector sends out the bill for the assessed tax and collects the amount owed from the property owner, who has a legal duty to pay it. Because the amount of the tax due is fixed by law through assessments, a legal process is needed to reduce the liability, that is, the amount owed. The third concept is abatement, which means a reduction in assessed tax. Taxpayers must apply for abatements and show a sufficient reason for reducing the tax. Each year's assessed tax is a separate legal obligation, and taxpayers must apply for abatement each and every year for which they seek to reduce the tax assessed for that year. The busiest time of the fiscal year for your office is the lead up to the annual commitment of taxes. The commitment creates the obligation of the owners of taxable property on January 1st to pay property taxes for the fiscal year. Taxable property includes real estate and personal property. First, you must determine the fair cash value of all taxable properties as of January 1st. Those values are used to determine the tax owed by the persons or entities who own those properties on January 1st. After you have obtained approval of the tax rate for the fiscal year from the Commissioner of Revenue, you multiply the valuation of each property by the tax rate to establish the tax due. You then commit the tax list to the collector with a warrant, which authorizes the collector to issue bills and collect the taxes from the assessed owner. Why do we need an abatement process? Because the amount of the committed assessed tax owed by each property owner for each fiscal year is fixed by law. The taxpayer must pay that amount by the due date. Abatement is the legal procedure used to reduce the amount of the tax owed. What are valid reasons or grounds to reduce the amount of an assessed property tax? The primary purpose is to correct errors in the assessment. The most common error is that the assessed value of the property is higher than its fair cash valuation on the January 1st assessment date. This is generally because the features of the property described in your records are incomplete or inaccurate, or the application of your mass appraisal valuation system does not accurately estimate market value, generally, or for this particular property. The abatement process is also used to put into effect a full or partial exemption for which the taxpayer qualifies and clear the municipality's books of uncollected taxes. As stated earlier, the abatement process is the means by which a taxpayer can dispute a tax assessment. It is the only recourse a taxpayer has to obtain a reduction in the amount of the tax owed for the fiscal year. The most frequent reason for an abatement is that the property has been valued for more than its fair cash valuation on the January 1st assessment date. In other words, the assessed tax is too high because it was based on the overvaluation of the property. Overvaluation is the ground whenever the taxpayer claims the assessed value of the property is higher than its fair cash valuation, regardless of the reason for the higher value. The taxpayer may claim, for example, that the valuation is too high because you have incorrect data about the features of the property, inaccurately analyzed the proper market data, or incorrectly applied your mass appraisal system to the property. The example illustrates an overvaluation claim. Suppose you have assessed a house for $300,000 for the current fiscal year. The taxpayer thinks the house would have only sold for $250,000 as of assessment date and is therefore overvalued by $50,000. Disproportionate assessment involves a claim that assessors are intentionally engaged in a pattern of undervaluing a class of property compared to properties in general. The issue of disproportionate assessment arose frequently in the 1960s and 1970s. Infrequent revaluations created inequities among property classes. In some cities and towns, assessments were systematically adjusted to reduce or maintain the share of taxes paid by selected taxpayers. For example, to benefit residential over business taxpayers, older over new residential taxpayers, or farms and open space over other properties to preserve the character of a rural community. The remedy for cases of disproportionate assessment involves giving the complaining taxpayer, for example, a commercial business, the same discount off of full and fair cash value that the favored class of properties receives. Very large abatements can result when the appellate tax board and the appellate courts find a pattern of disproportionate assessments and slash taxes, for example, on business properties. Indeed, the city of Boston was nearly bankrupted about 37 years ago when a large judgment was affirmed on appeal by the Supreme Judicial Court. Going forward, laws were changed which reduced the risk of one class of properties being assessed for less than their worth. Every 5 years, the Bureau of Local Assessment within the Department of Revenue reviews assessed property values in relation to market sales to ensure properties are accurately assessed, and different tax rates for different types of property, residential, commercial, industrial, open space, and personal property were authorized by a constitutional amendment adopted in 1978, which gave communities latitude to lower rates on residential properties. Misclassification is a ground for abatement available to taxpayers in cities and towns that charge different tax rates for different classes of property, or have split tax rates. Typically, in split tax rate cities and towns, a residential taxpayer is assessed at a lower tax rate than a business property owner. If a residential property was incorrectly classified as commercial property, it will have been assessed a higher tax than it should have been assessed, and the taxpayer is entitled to have the difference abated. Let's review what we have learned in this lesson. You assess taxes to each owner of taxable property each year by committing the tax list for that year with a warrant to the collector. The warrant authorizes the collector to collect the taxes owed by each taxpayer in the list. The commitment fixes the liability or legal duty of taxpayers to pay the tax assessed. The abatement process is the remedy taxpayers have under state law to dispute and reduce their assessments. Abatements are used to remedy assessment errors, put into effect exemptions for individuals and entities entitled to them, and to clear a municipality's book of taxes that are uncollectible. Taxpayers may obtain abatements because their properties were assessed for more than their fair cash valuation. That is the most common reason abatements are sought. Taxpayers may also obtain abatements if their properties are in a class the assessors intentionally valued at a higher percentage of fair cash value than properties in another class, or their properties were incorrectly classified in a class for which the city or town has a higher tax rate than the rate for the correct class.